Investing right now. Hey everyone, it's Wolfgang. So the stock market has been soft, and in the last couple days, and it's affecting people. In terms of investing, the stock market is a big factor because it's such a big market. So let's talk about investing right now with the stock market sort of a little bit weak. Okay, so the market level right now, the 52-week range for the S&P 500 is 481 to 689. Okay, today it closed at 670, almost at the top of the range. So this might be a perception problem. Although people are claiming that the stock market is showing weakness and selling off, the SPY is an exchange-traded fund that represents the Standard & Poor's 500. That's a pretty diversified exchange-traded fund. It's pretty close to the highest it's been in 52 weeks. So not a big sell-off in the market, although the perception is that it is a big sell-off, and I'm going to explain why it feels that way. Okay, so 7 months ago, the SPY, the S&P 500, was all the way down to the lowest level, close to the lowest level. It was at 496. So back in April, SPY was much lower than it is now. So not all parts of the stock market are weak. And there are other places to invest besides stocks. Okay, we'll talk about those. Okay, so why does this sell-off in stocks, why is it getting so much attention? Why does it seem so intense? Answer, it's the effect on the artificial intelligence stocks because they've been getting all of the news. Okay, but think about this. The S&P 500, the SPY Exchange Traded Fund, is pretty close to its high for the past 52 weeks. That's an entire year. And that's 500 stocks. The Mag 7 is a very narrow slice of the market. The Standard & Poor's 500 is close to the top of its range for the past year. So this is a perception thing. But perception kind of rules right now because the artificial intelligence stocks are getting a lot of press. So as an example, the QQQ is another exchange-traded fund. This is tracking the top 100 NASDAQ stocks, and a lot of those are the largest technology companies. It's wiped out 2 weeks worth of its gains. So all of a sudden, like 2 weeks worth of gains are gone. So that's getting people's attention, but that's technology, okay? The QQQ is much narrower than the Standard & Poor's 500. And the SPY, the Standard & Poor's 500, is close to the top of its range over the past year. So you have to adopt some perspective about the sense that, okay, the market is soft. How soft is it really? Okay, is it the technology stocks? Yes, mostly, being challenged. Speculation in artificial intelligence is being challenged right now for a lot of different reasons. A lot of news about artificial intelligence is challenging people's perception of how safe is it to invest in AI right now. Being diversified, like in the SPY, compared to the much narrower QQQ, being diversified leaves you less effective by a sell-off in that one area in technology. You're more diversified. You're less concerned about just one small sector being affected. I mean, if you think about it, the Standard & Poor's 500 is close to the top of its level over the past year. That's much more diversified, the 500 stocks, than the technology-heavy QQQ. So being diversified leaves you less effective by a sell-off in one area. So this is also a good time to think, besides being diversified in stock holdings, if you consider your sort of your net worth, whatever level you're at, you have choices on how to divide up your net worth among investing options. Stocks is one, obviously, but consider bonds, consider real estate, consider collectibles, consider a small business participation. You don't have to own the entire small business. You might own a portion of it. So there are ways to diversify your net worth so you're not subjected to the down cycle of maybe one small sector, like technology stocks. Okay, but if you are invested in an area that has sold off, this can be an opportunity, okay? A chance to buy at a lower level. This is called an entry point. This is a lower entry point when stocks have sold off. If you like, for example, to invest in technology, you like the QQQ Exchange Traded Fund, that's the top 100 largest NASDAQ stocks. They just wiped out 2 weeks worth of gains. So you could say this might be a good entry point to buy the QQQ when it's weak. I want to say here that I'm not an investment advisor. You should seek help from your investment advisor. This is not a recommendation to buy anything. We're basically talking in general terms, and particularly about staying diversified. The QQQ is the 100 largest NASDAQ stocks. That's got some diversification in it, okay? So another example, the VTI, the Vanguard Total Stock Market, that's an exchange traded fund, it's at its lowest level in about a month, since early October. So in terms of entry points, you have some opportunities to say, okay, the market has sold off a little bit, things are cheaper. Is this a good place to buy? Maybe, right? So you can't necessarily look at a sell-off and say everything's bad, right? It's not black and white. It can be a good entry point to buy things that are now cheaper. There are some sectors that are in reversal, and I'm going to use one example that everyone should be familiar with, okay? Consumer discretionary. Consumer discretionary is restaurants, retail, entertainment, and to a lesser extent, autos, new and used cars, vehicles, basically. These are things that consumers don't necessarily need, but they will buy if they think times are good, if they feel confident about the economy. So consumer discretionary, restaurants in particular, not doing so well, right? You've probably heard news about that. So is this an entry point? Is this an opportunity? In my opinion, yes, it is. If you're patient, buying consumer discretionary when it is not in favor, the old saying, buy when people are fearful, sell when people are greedy. So this is a time to buy when people are fearful of consumer discretionary. Restaurants are weak. Example, Invesco small cap consumer discretionary, PSCD, has not been this low. If you look this up, if you look online, PSCD has not been this low in 5 months. It has dropped to a 5-month low. This consumer discretionary diversified investment, is that a good place to invest? Maybe, because we know the economy is going to improve eventually. The things that are affecting the economy now will be resolved, and the economy will improve. And when the economy improves and people begin to feel confident about spending again, restaurants, entertainment, retail, and so on will pick up. Okay, so I couldn't fit everything on the board. What are the macro trends that are affecting investing right now? These are things in all of our environment affecting how we feel about investing, okay? Macro trends means things at the top of our consideration that we see frequently. The biggest one is the government shutdown, the uncertainty about that, right? The government shutdown is affecting, especially I think travel, because they're starting to curtail travel by air at some airports. Another thing affecting everybody's opinion about investing, the holiday season, we're entering that now. Thanksgiving, then the holidays in December. Also, the changing weather. In parts of the country, the weather's not changing that much. The south, right? The southern parts of the country, not huge changes in weather. In the northern parts, some pretty big changes are in store. Okay, another macro thing affecting our opinion about investing, the recent perceived weakness in parts of the stock market, especially artificial intelligence, the Mag 7. Another macro issue, the job market. That's been in the news. Another macro issue, mortgage interest rates affecting how people buy homes. Are they in a position to be able to buy with mortgage rates where they are? So just real quickly, government shutdown, the holiday season we're entering, changing weather, recent stock market weakness in some part of the stock market. The job market is soft, and mortgage interest rates are still relatively high compared to recent history. So what about the future? What's the look ahead, the future for the economy? Okay, it somewhat depends on the region of the country that you live in, right? It depends on where you live in the country as to making predictions about the economy. Real estate will remain so-so because interest rates are relatively high. If you look back in 2020, 2021, not that long ago, interest rates were below 3% for mortgages. We're not there, and that's not coming back anytime soon. So real estate will remain soft. The technology sector, it's going to continue to get investment. Even though there's been a recent, in the last few days, sell-off in technology stocks, it's going to continue to get investment because improvements in technology affect everyone and provides growth in the economy. And so that tends to get investment. Growth tends to get investment. Power delivery, water suppliers, infrastructure, data centers for technology. Consumer discretionary, for now, it's going to remain so-so because we have some economic issues, right? Several economic issues to shut down the job market, interest rates, the time of year, changing weather. And we should all expect improvement, okay, in consumer discretionary, in discretionary spending. Expect improvement, but the big change we're going to need to see is strength in the job market. Strength in the job market will have to return, and that will be helped by lowering interest rates. When interest rates are lower, it becomes cheaper for people and businesses to borrow money. They borrow the money, they spend the money. That helps hiring. So once the interest rates are lower and hiring picks up, spending will improve. Consumer spending will improve. So we have some headwinds, but I just wanted to point out that if you look at the stock, a bigger picture of the stock market, the SPY, it's pretty close to, it closed today at 670, close to the high for the past year of 689. We're not really in that big of a sell-off. It seems intense because artificial intelligence has been getting a lot of attention, a lot of investment, and all of a sudden the past few days it sold off a little bit. Speculation in artificial intelligence is being challenged right now. So that's the big deal with stocks. Over the long term, being diversified, especially if because if you think about it, the SPY has held up pretty well. If you're diversified and you make regular investments into stocks and other options like bonds and real estate, you should do you should do well. You have to be patient. You have to be tolerant of ups and downs. But I just wanted to point out that the sell-off in the market, it seems more intense than it is because of headlines. When something is getting a lot of coverage in the news, it gets people's attention. If you have any questions about this, please post questions in the comments. I'd be happy to answer any questions you have. I really want to thank everyone for watching. Have a great day.